Let's just jump right in. Welcome to this explainer, where today we're unpacking the massive, high-stakes story of IREN. It turns out Bitcoin miners have found a shiny new toy, and yeah, it's AI. Today we're looking at a company navigating one of the most ambitious and honestly wildly expensive business pivots in the entire tech world. We're going to break down exactly what they're up to, why Wall Street is completely buzzing, and tackle the huge debate: is this the next great infrastructure play or just a highly speculative bet?
Right, so let's start with this staggering number, $9.7 billion. Let that sink in for a second. And just to be clear, that is not their market cap, and it's definitely not some startup valuation. That is a massive concrete contract this company just landed with tech giant Microsoft. This single figure has literally transformed how the market views IREN. Practically overnight, they went from a standard crypto mining operation to a central player in the global AI infrastructure buildup.
And naturally, that colossal deal triggered a massive stock jump, nearly 10% in a single day. But that forces us to ask the million-dollar question, right? Is this a genuine AI infrastructure winner, or is the market just getting way ahead of itself? Basically, are we looking at a secure long-term bet, or just another highly speculative play fueled by the relentless AI hype cycle? To answer that impartially, here's our roadmap. First, the $9.7 billion catalyst. 2, the bull case. 3, the bear case. 4, trading the volatility. And finally, what to watch next. Okay, hitting section 1, the $9.7 billion catalyst, delivery and validation.
So, let's start with the incredible news that just hit the wire on August 13th, 2026. This wasn't just some fluffy, speculative press release. No, IREN actually built and delivered a 50-megawatt liquid-cooled facility in Texas. And get this, they did it ahead of schedule. The really crucial takeaway here is that this facility was custom designed for NVIDIA's cutting-edge AI clusters, and Microsoft officially accepted the delivery. That's an absolute game-changer and a massive operational milestone for a company pivoting this hard.
Now, the big so what here is that this Horizon 1 delivery, it's really just the tip of the iceberg. It's actually the first of 4 planned deployments. That $9.7 billion we talked about represents the total contracted annual recurring revenue across all 4 of these massive projects. Put simply, IREN has already locked down a very real, non-speculative revenue stream from one of the most powerful tech companies on the planet. Which leads us perfectly into section 2, the bull case, and exactly why Wall Street is so fired up.
Check out this specific certification. NVIDIA officially named IREN an Exemplar Cloud partner on their GB300 NVL72 platform. Now, in plain English, that platform is essentially NVIDIA's absolute top-tier flagship supercomputing rack. And listen, NVIDIA doesn't just hand this status out casually to anyone with a big warehouse and some cooling fans, right? This acts as a powerful competitive moat. It proves to the entire enterprise AI world that IREN actually meets the absolute highest standards for infrastructure performance and reliability.
And you can clearly see the Wall Street hype that follows that kind of validation. While the stock was sitting right around $43.67, the consensus target price among analysts is way up at $81.73. That's a massive 87% upside. And if you look at top-tier analysts like Bernstein, they're projecting even higher, with targets hitting $100. The bulls basically see a certified revenue-generating powerhouse that is severely undervalued by the broader market. But hey, every massive opportunity comes with some serious friction. Let's flip over to section 3, the bear case, looking at the financial realities and execution hurdles.
All right, we need to pull the rug out for a quick reality check, because investing in IREN is absolutely not without significant risks. In their latest quarter, revenue actually fell 22% sequentially to $144.8 million. And that resulted in a staggering net loss of negative $247.8 million. You just can't ignore a $250 million hole in the balance sheet.
So why the massive loss? Well, transition costs. As it turns out, you can't just slap an AI sticker on an old Bitcoin mining rig and call it a day. Pivoting an entire company's infrastructure from crypto mining over to advanced liquid-cooled AI data centers is astronomically expensive. Building the future of AI computing takes massive amounts of upfront capital, which means actual profitability for IREN is, well, very much still a work in progress.
Plus, while delivering Horizon 1 is an undeniable success, they now face massive operational and execution risk. They have to successfully deliver Horizons 2, 3, and 4 by the end of this year, and looking slightly further out, they need to scale their capacity from 480 megawatts in 2026 to a mind-boggling 1.2 gigawatts by 2027. For a little context, that is roughly the power output of a massive nuclear reactor, or, enough to power Doc Brown's DeLorean. The construction demands here are literally off the charts.
So when you combine that heavy execution risk with their current financials, you get a much clearer picture of the bear case. They're trading at a PE ratio of roughly 80, which is extremely expensive for a company that's currently losing money. Add in the $3.7 billion in convertible notes, which is debt that could severely dilute existing shareholders if it gets converted, and you can see exactly why some investors are choosing to hold back. Honestly, any slight delay in construction could instantly spook the market.
So how do we actually play this? Let's move to Section 4, Trading the Volatility, covering technical and sentiment analysis.
Okay, what is the stock actually doing in this daily tug-of-war between the bulls and the bears? Well, following the Microsoft delivery, volume absolutely exploded on heavy institutional interest. The stock pushed up to $43.67. Now, the critical floor to watch is the support level right around $38 to $40. But if it breaks that $45 resistance ceiling, oh man, we could see a really fast near-term run toward the $55 to $60 range.
However, it is vital to remember the context of this sector. AI infrastructure stocks are highly momentum-driven. Consider this your volatility warning. Literally one piece of negative news, like a construction delay or a missed target, could easily trigger a 15% drop overnight. It's a textbook, high-risk, high-reward setup where momentum just rules the day. Finally, let's look forward. Section 5. What to watch next? Focusing on the 3 to 6 month horizon.
Let's turn all of this into a quick, actionable checklist for anyone watching this stock over the coming months. Number 1, watch the delivery dates for Horizons 2 through 4 very closely. Number 2, look for actual revenue recognition from Microsoft. Press releases are nice, but the market wants to see the cash actually flowing. Number 3, keep an eye on the remaining Bitcoin mining results, because crypto swings will absolutely still impact their bottom line. Number 4, monitor broader AI spending trends from the big titans like Microsoft, NVIDIA, and Amazon. And finally, number 5, track the buying and selling activity of insiders and major institutions.
To summarize this completely impartially, IREN has absolutely carved out a legitimate opportunity in the AI infrastructure space. The long-term secular trend toward AI computing gives them a very tangible runway, and they have real, concrete validation from Microsoft and NVIDIA. But because of the massive transition costs, that convertible debt, and the sheer mind-bending scale of what they need to build, this remains a highly speculative growth play with an incredibly wide range of potential outcomes.
So, I want to leave you with this final thought. If you fundamentally believe in the long-term AI boom, are you personally willing to stomach the massive short-term volatility to own a piece of the foundational infrastructure? Remember, this isn't financial advice, but I would absolutely love to know where you land on this risk-reward scale. Drop your thoughts in the comments, let's keep this conversation going, and I'll see you in the next explainer.